Warm welcome to all of you. This is A K Asnani from Smart VRC, and this is our webinar number 126. Thanks for your excellent support. So today's topic is ways to tackle fear. Yes, it is a very strong emotion like greed, but there are ways to minimize the impact of fear on your transactions, on your action, on your portfolio. So the estimated time is about 30 minutes. So to start with, we go with a poll, and the question is, fear is due to a threat which can cause a temporary fall in portfolio value. So it's very simple, whether it is true or false. So here is the opportunity to participate in this poll, and you have got two options, whether it is true or false. I repeat the question. Fear is due to a threat which can cause a temporary fall in portfolio value. And I'm very happy to share that 80% of the participants have voted and cast their polls. So within next 3 seconds, we shall close this poll. So 93% of the participants have given their verdict, and let's see the results. So 83% say yes, it is true, and 17% say no, it is false. So fear is due to a threat which can cause a temporary fall in portfolio value. So there is nothing like that, what is true and what is false. But if 83% of the investors think that it is a temporary fall in portfolio value, then they also know that nothing to be feared. Okay. So the webinar contents would be like this. What are the ways to understand? First, we must understand what is fear. Then what are the ways to tackle fear? Then opportunities to look for. And then as usual, this will be followed by question and answer session. So I'm just showing you a BSE sensitive index chart starting from 19th of September 2017. That is exactly 5 years ago. This was the index, about 29,000 points. And those who were invested in this duration, I mean to say from February 17 to February 18, 1 year, they know very well what happened. And a lot of mid and small cap stocks, they gained handsomely. And the market was over discounting the prospects because the corporate performance, because the company's financial performance in general was not that positive, but the markets were turning very high, especially mid cap and small caps. And on 5th of February 2018, we launched a scheme with the name of Smart Millionaire Stocks. At that point of time, Sensex was 34,830, and we targeted returns of 100%, and target date was 4th of August 2021, and that makes 3.5 years. So this was our scheme, and immediately there were very strong reactions. and it was very natural that the markets are stock, in particular the stock in the mid and small cap category are so high, and you are starting a scheme at this point of time. And many investors have raised this apprehension. I got a very critical feedback, and let's see how we progressed. And this gives you a very good glimpse what can happen and what actually happened. So the start value was 5 lakhs. This was just a number. It was not necessary to invest 5 lakhs, but the name of the scheme was Smart Millionaire Stocks. So we started with 5 lakhs, and the start value was, sorry, it is not the present value, it was the target value. Target value was 10 lakhs. 10 lakhs means 1 million. So this is how this scheme got started. And immediately after the start, market fell down. And I hope you would be able to recall that at this point of time, it was, of course, the index was down, but mid cap and small cap got hammered, and hammered like anything. And then fast forward to 2020, market kept on moving up and down. So at this point of time, there was a strong fear. People were not interested in investing, and they were very fearful, very cautious. And then true to their fear, true to their emotions, market fell down, and especially mid cap and small cap. And from there on, there was a steady rise in the index. And we all know that what happened. For more than 2 years, there was no correlation. I would say very low correlation between the index and the mid cap and small cap. In fact, there were only 4 or 5 stocks from the Sensex which were gaining, and that is why the index was gaining. But in actual, the portfolio value was not moving up. So much so that on 3rd of January 2020, that is after 3 years, almost after 3 years, if I see from the start, and if I see from the start of the scheme, then even after 2 years, the present value was 5 lakhs, and we started with 5 lakhs. So out of 3.5 years, 2 years have gone, and we are nowhere. We were there from where we started. And of course, the Sensex was up by about 15-17%. So this was a very big challenge. And at this point of time, mid cap and small cap index were constant, means they have not moved up. But the Sensex was up by 17-18%. And you will very well appreciate that people always measure the performance of the market with respect to the Nifty or Sensex. So it was a very challenging time. And what happened next? So what happened next was, we all know at this point of time, that is January and February 2020, we all knew that the COVID has arrived, and at any time it can strike. People were fearful, and true to their fears, market fell down, and fell down very sharp. On 25th of March 2020, the Sensex was, during intraday, it was even below 26,000 levels. And this is what happened to our scheme. Our scheme fell down to 3.3 lakhs. So starting with 5 lakhs, we were at 3.3 lakhs after 2 years. Sorry, it was, yes. So moving ahead, people were very depressed, and very distress selling was observed at this point of time. This should be read as 20, not as 21. And we all know there was no indication of any vaccine, any development of vaccine, or any concrete solution how to tackle the COVID. All around there was fear. No one was daring to ask to invest. And this was the time when we restructured our complete stocks, not only in this scheme, but in all the schemes. And then what happened? What happened is something like this. We all know the stock market, that was the bottom. 25th of March 2020 was proved to be a bottom. And from here on, the Sensex is up by about 130%. But before that, on 4th of August 2021, this scheme was designed for only 3.5 years, and we were able to reach to 9.4 lakhs. That is 88% up compared to Sensex gains of only 56%. So this was possible because we were not fearful, and of course there is no guarantee. That was only the targeted returns of 100% in 3.5 years. And despite so many ups and downs, we were able to reach to 9.4 lakhs. Yes, we were short of about 6%, but nevertheless, we did wonderfully well. And compared to even the Sensex was up by 56%. And why I'm telling you this story is there were many ups and downs. Investors were fiery, skeptical about reaching the target and all those things. And then we all know very well and what has happened. Market went up to, it crossed 60,000 levels, and even at when Sensex crossed 50,000, there was lots of apprehensions that 50,000 is too big and it is a historic high and all those things. But we all must appreciate that 50,000 is only a number. What matters is the valuations. So that is how we reached to the 60,000. And now we all know there are a lot of, at this point of time, that means in December and January, this December 2021 and January 2022, there are a lot of apprehensions once again about the budget, about the US Federal Reserve's meeting and all those things. And today, on 19th of February 2022, most of the investors are worried what will happen to Russia and Ukraine tussle. So all along the way, Sensex has, during last 5 years, Sensex has doubled. And despite the fact that every now and then there was a fear of overvaluations, there was a fear of as if the mark during the trough of the index on 25th of March and around this period, there was a fear as if the whole world is coming to an end. So that was the kind of fall we have witnessed, one of the sharpest falls in the history of Sensex. And then that means again a fear. So most of the time you will find that there is a fear. We all are living in fear. And despite this fear, during last 5 years, Sensex has doubled. Doubled in 5 years means about 15% compound returns. Not only it is during last 5 years, I can tell such kind of story for the last more than 30 years. And despite so much of fear, so much of ups and downs, and so many events taking place, even a passive investor must have gained 14% compound returns if he had invested in Sensex and forgot everything. So he is not at all fearful, and he has just invested one time and still he gained 14% compound returns. So this was all about the fear. We are always living our fears rather than enjoying the returns, despite the fact that we are getting one of the highest returns, not only the highest return, but way higher than the second best performing investment asset. Despite that, we are always in tension, in fear and whatnot. So how to tackle this thing? How is it possible that we can remove fear? Let's see. So before that, this is kind of I can say a very different kind of poll this time. And we are receiving feedback that some of the investors are saying that it should be on Saturday, and others are saying that it should be on Sunday, 11 a.m. I want to know once again from you, what is the best suited time for you people? So that, because we are organizing this webinar for the benefit of investors, and it is the investor's choice which matters the most. So the question is, poll is on your screen. Whether Saturday 7 p.m. is more suitable to you or Sunday 11 a.m. is more suitable to you for this webinar. And so in another 3 seconds, we'll close this poll. Today's participation is pretty good, and 86% of the participants have casted their poll, and the results are like this. 69% go with Saturday and 31% go with Sunday 11 a.m. So we shall continue with Saturday 7 p.m. as we are doing it today. Thank you once again for giving your preference. So this we have covered, understanding fear of not only losing, but fear of overvaluation, and how investors, even passive investors, have generated 14%, 15% returns. Then why to fear so much, and how to tackle fear. As you might have observed, no sooner the one fear goes, the other one knocks the door, isn't it? So fear is going to be there, and fear of different types you will keep on facing, like high valuations. FIs are selling. How long FIs will sell? See, this is a very nowadays, means from last 1.5 months, 2 months, I'm getting a lot of queries that how long FIs will continue to sell. No one knows, because FIs have got tremendous power and huge amount of money to invest all over the world, and they have allocated only small percentage to different countries. Maybe for India, it may be only about 4%, and even that 4% runs into tens of thousands of crores. So even a small selling here means a very big fall in Sensex, because our market capitalization is way smaller compared to the US, and most of the FIs are from US. So try to understand that FIs have got so many markets, FIs have got so many investment options. Okay, so they can, it is not that they are invested only in stocks. They keep on changing their investment assets. Sometimes they invest in stocks, sometimes they invest in bonds, they are shifting it. So it is a process, and we should not be worried about their selling. US interest rates, yes, every economy has the right to protect its growth, to protect its form, and to go for uniform rate of growth. So there is nothing wrong if any economy, any country raises their interest rates. US stock market, people are very much concerned that US market is down, so our market will also be down. This is all fear, but it is all temporary. Domestic interest rates, same as the US interest rates. Then come the domestic elections. Yeah, as you can recall, during last 30 years, so many elections have been fought, not only on a state level basis, but also at the center stage. And then the inflation, yes, inflation is there and it will always be there. And inflation in a certain way is good. It should be a demand pull inflation, which is good for the economy and not the cost push. And presently, we are facing both kinds. There is a strong demand, and also there is a cost push. Cost push means raw material prices, commodity prices are high. And then the unemployment rate. These are the kind of variables which will always be there in the market, and nothing to be feared, only to be understood that yes, they are going to be there. If one goes, the other will come. Other goes, the third will come. No sooner the Ukraine or Russia tussle, if it gets resolved successfully, then people will start thinking of when will the Fed increase the rate of interest. If it increases the rate of interest, then when will India increase the rate of interest? And then in this process, people forget to concentrate on their portfolio, what their companies are doing. So this is all about the fear, and 9 out of 10 times fear only will be like the false evidence appearing real. Yes, you must have noted that during last so many years, who are long-term investors, they will appreciate this thing that 90% of the time fear is misplaced, because it is not a thing, it is an emotion. Fear will always be there in the market for some or the other reason. People are there to find out the reasons to get scary, to get fearful. So be prepared, and you have to learn to dance with it, because without tackling fear, you cannot succeed. So it has to has a balance. Okay, fear will be there, but you will have to find out the ways to move ahead. If you are very much fearful that there is a possibility, suppose you are assuming that there is a 50% possibility there is going to be war between Russia and Ukraine. So it depends on individual to individual. If suppose an investor is 50%, he thinks that there is a 50% possibility, then there is a good time to make changes in your portfolio, so that if this thing comes true, then which are the stocks which will protect your portfolio gains, and which are the stocks which will fall down. And if that really happens, and at that point of time, what you are going to do, that strategy should be in place, not to be 100%, but to be 50%, because you are saying 50% probability. So this is how you have to make changes in your portfolio. Be prepared. Have patience. As we have seen, people who are patient, and they find that it has never happened that the Sensex fell and it never took off. Sensex गिरा और कभी बढ़ा नहीं. आपने ऐसा कभी देखा? It never happens. Now, I know some people will tell an example of Japan, but Japan has got a very different kind of economy, and I think Japan is the only exception in the whole world कि market गिरा और उसके बाद कभी बढ़ा नहीं. It will never happen. And this is the evidence. As you can see, the index from 1986 to till date, and this chart has been taken from Google Finance. And this is the point where I entered the market when the Sensex was around 700 points. And as you can see, there were so many ups and downs. There was a COVID, there was 2008, there was Harshad Mehta kind of bull run here, and this was the Y2K, or also known as .com event. So many events, so many elections, so many state elections, so many Fed increase in interest rate, and still I'm not only there, but I'm making good money, not only for me, but also for the investors. And it is during this period that the Sensex has delivered 15% compound returns. So this was all about the patience, and fear is for your benefit. Yes, when most of the people are fearful, at that time market will go down and go down, and then you will get an opportunity. So you have to act as a contrary. You have to act in a way different, because you know very well it has never happened that the market fell down, it never recovered. It never happens. So you have to take advantage of that fear. And I know few of you might be thinking that at what point of time? Gradually, because no one knows where the bottom is, where the fear will bottom out. And we have used this technique. Fear can kill you, and also fear can win you. So this is the latest, not the latest, but this is a classic example. And this is a classic example of SBP. SBP is a smart billionaire picks. This is a part of smart gains. This is in blue color, and red color is BSE Sensex. Now, as I told you, during last so many years, Sensex has delivered 14 to 15% compound returns. But here is SBP, which has delivered 26.32% compound returns from last almost 21 years. And why? How we can outperform BSE Sensex by such a wide margin? It is because we take advantage of the fear. Yes, mostly it is the what we do in times of extreme fear in the market that decides your total returns in the long term. Exactly. And I can say that we have mastered this art. Now there is a very good way to divert your attention from fear. You start focusing on 2 years, 3 years hence, 2 years ahead, what is going to happen, 3 years ahead, what is going to happen. And then you prepare your portfolio. Like, I will give you an example. Recently, there was a budget and strong focus on infrastructure. Now, if for some reason, for any reason, market nosedives, then that will be a good opportunity to add the stocks which would be the beneficiary of infrastructure. That is how you have to plan. Have confidence in the government to take suitable steps to protect the economy, because it is the corporate sector which generates revenue, not only for the individuals, but also for the government. So no government will allow its corporate to collapse. They will take all the measures to protect corporate. And if the corporate is protected, that means stock market will always be there to bounce back. Have confidence in the management of the company you are invested in to steer the company way ahead. Did you notice what happened during COVID time and post-COVID? Many companies suffered, and you must have observed there are many companies which immediately switched to the technology for their marketing, for the delivery of the products and whatnot. And that is how. And good company management will always find the ways to grow ahead. So you should bet not only on the fundamentals of the company, but also on the management, on the CEO. So this we have already covered. Think contrary, if the market falls, you get an opportunity to invest at low prices. Then why to fear? If you are a long-term investor, then fear is good in a sense to provide you, it provides you an opportunity to buy the stocks at low prices. What are the opportunities to look for at current juncture? First is infrastructure, that is going to do pretty well in times to come. Then textile. As you must have noticed, a lot of textile companies are doing very well, and this because of the ban by some leading countries from China and from a particular location, and also a lot of shops provided by the government for the textile sector. Then comes the technology. Due to the COVID, you must have heard that many CEOs have said that due to COVID, technology has gone ahead by 4 to 5 years, and technology is really doing wonders in many fields, not only in AI, but also in battery powered vehicles and other things. Then comes the construction. There are very limited companies in construction, but they are doing very well. And then specialty chemicals. Now for specialty chemical, we have come out with a smart report. Smart report is a single stock report, and it is a part of, this stock is a part of smart multibaggers. We have targeted returns of 160% in 40 months. Yes, it is about 3 years and 4 months, and 160% returns. Risk is medium. Management is very good, and they have a good long-term track record of more than 20 years. Liquidity of the stock is very good. It is a large cap company, and valuations are attractive, and smart report price is 1180 rupees. Those who wish to subscribe to this report can visit our website, and the link I will forward in the link I have already forwarded in the WhatsApp groups. So this was all about the today's webinar. Now we come to the questions and answer session. Before that, I would like to show you the performance, product performance. This for 2021, Sensex up by 21.69%. Smart Gains internal rate of return is 78.32%, and Smart Billionaire Picks is up by 56.53%. Multibagger internal rate of return is almost touching 100%. That is a far better performance compared to the Sensex returns of only 22%. Smart Freedom is also up by 42.8%, and Smart SIP IRR is really a dark horse with returns of 58%. So how there are other ways also we can help you apart from the stock advisory. We have got Smart Insights Pro small videos of about 20 minutes each, and there is a group of videos about 10 to 15 depending on the category of the CPRO. And then I'm also author of the book Way to Billionaire in English as well as Gujarati. If those who are interested can purchase the book from our website, and website address is smartverc.com. Also, we have got financial freedom calculators on our website. These are freely available for all. Apart from that, also we provide IPO reviews, and this is our website, smartverc.com. It is safe and secure for subscription point of view also. So coming to the key differentiators, we have very long experience, and importantly, we have got the ability to find the worth of the stock with pretty good accuracy. That is the ultimate thing required in stock market. Whatever we buy, there is a worth associated with it. But in the stock market, hardly anyone asks what is the worth. They are only focused on the price. We provide a closed loop advice. For every buy advice, there is a corresponding sell advice. So you need not have to worry when to exit. Of course, we provide you the stop loss, but still, whenever the stop loss is hit or the target is achieved, or we find that there are better opportunities, or there is something going wrong with the management, or there is something which is stagnating and we may not be able to reach to the target, that time also we ask you to exit. And for all those actions, you get the notifications on WhatsApp, on our own mobile app with the name of Smart VRC, and also on email. You can read the complete reports on our website. Also, we provide the weightage and allocation, which is very important from the point of view of total portfolio returns. All the advices are during the market hours. So it is not that if the stock falls to this level, then you buy, or if the stock goes to such level, then you buy. It is not at all like that. What is the current price? Now you have to buy at the current price, and that too during the market hours. So this was all about today's webinar, and now this will be followed with question and answer session. So get ready with your questions. Before that, we want one favor from you, those who are attending this webinar for the first time. And if you want to be added in our WhatsApp group, then you can send a request with your name and city to this number, that is 9755920780. This number is also visible on my screen. Thank you very much for your valuable time. So those who have queries, they can raise their hand through the reaction button, or they can use even the chat box to post their queries. Yes, Bimleji, kindly unmute yourself. Yes, sir.
Sir, my question is that recently, whatever recommendations we are getting on any subscriptions, what if that recommendation is already held by me? So can I increase my percentage, or I should leave that?
Okay. With every advice, we provide you the weightage, the allocation. If your holding is less than that allocation, then definitely you can add.
Okay, sir.
Yes.
Sir, is there any particular stock related query can be entertained?
Yeah, you can. If it is recommended by us, then you can write to us. Means don't ask here, and you can write on the WhatsApp. You can send the query.
Okay, sir. Thank you, sir.
Thank you. आप हिंदी में भी पूछ सकते हैं क्वेरी. No other queries. So this is the one of the rarest thing that I can really understand the kind of fear we all have. And yes, Mr. Jeet.
Very good evening, sir.
Good evening. Good evening.
A very good question again.
Thank you.
Sir, I just want to see that slide which you had the smart word. I think it was said by Benjamin Franklin. I think you were going through the slide.
Yeah. Actually, I forwarded it because this was a repeat from the last webinar. So that is why I didn't show you. And okay, I will show you. I will show you that.
Okay.
So this was the smart word. The stock market is always there. It has been there for centuries and it lives longer than anyone of us here. Therefore, don't rush and trade all your capital like there is no tomorrow. There is a quote by Benjamin Lee. And at times you will find that we get tempted. No, this is the time to invest. In future, we may not get such a wonderful time, such a wonderful stock at these valuations. It happens sometimes, but it is not like that. Like fear, it will keep on coming. One fear goes, the other one knocks the door. And similarly, in stock market, you will always find the stocks. Not now, maybe after 3 months, after 6 months, after a year, you will get an opportunity, and definitely you will get an opportunity. Remember, in January, February 2020, Bajaj Finance was something about 4,800, and within 3 months, not even 3 months, in 2.5 months, it was available for rupees 1,900. 4,800 rupees stock was available for 1,900. So that is the way to wait patiently. You will get an opportunity. And today it is 7,000. So that was a wonderful opportunity. Similarly, there are many other stocks. Indian Hotels we recommended, Tata Power, and many other stocks like Tata Elxsi. Tata Elxsi came down to 600 rupees. I think below 600 rupees, and today 7,000 rupees.
Yes, sir. Could you also show this opportunity slide also, sir? In the sectors you mentioned.
Are you able to see the screen?
We are seeing you, sir, on the screen.
Okay, wait. This one?
Yes, sir.
Okay, these are the sectors in the present circumstances which provide good opportunity to pick really good stocks. Infrastructure, textile, technology, construction, and specialty chemicals. Okay?
Yes, sir. Thank you. Thank you very much.
Yes, Vinay Kumarji, what is your query?
Sir, my query is, let's say if there is a sector-based study, the growth study, and if any sector, let's say, have 10 companies, for example, construction, so be it L&T, Aluwalia, or maybe 7, 8 more companies which are listed in all categories of large, mid, or small. So how does VRC chooses that which one to evaluate and then further recommend, or all the sector, entire sector is actually evaluated and then the recommendation comes? So I'm saying, for example, let us say I have been recommended one stock, and I believe I study another stock in that sector which has not been recommended or not being discussed. So how is that actually chosen? Is the entire sector, or it's particularly the stock? I mean, how can we take benefits from other stocks of that particular sector?
See, that is how there is a differentiation between the bottoms up and top down approach. I'm using bottoms up. So what happens every quarter, we analyze the results of the companies, and while analyzing, automatically you will come to know that this sector are doing well. Like for the third quarter results, if you analyze, you will find that the real estate sector as a whole has done wonderfully well. Godrej Properties, Soba Developer, and there are many other, Overa Realty. And automatically it will come out that yes, the real estate sector is doing well. This is one way. Another way is to go back about 8 months, 9 months ago. Godrej Properties CEO told very clearly that we are going to have a boom-like conditions in real estate for next 4-5 years. So that is a top-down approach. From there, you can find out what are the other companies where to invest. Now, if suppose real estate sector is doing well, but there is a limit, means how much we should allocate. For as far as the specific company is concerned, I prefer the minimum weightage 3% and maximum is 8%. But as far as a single sector is concerned, my preference will go with not more than 20% or not more than 18% the sector exposure. So that way you can select the stocks.
Okay. Thanks.
Thank you. Mr. Praveen Kumar. Yes, sir. Mr. Praveen Kumar.
Yeah, hi sir. Hi, good evening, sir.
Hello, good evening.
So I'm audible?
Yeah, you are audible.
Sir, I can't hear you, sir.
You are not able. Okay, you can.
Yeah. Now it is better. So now it is better.
Yeah.
Sir, I want to know about this your product stock SIP. So where you have mentioned like 15 to 18 stock you are recommending.
Yeah.
So explain on that product, sir.
So every 5th of the month we recommend one stock, and next month we may recommend another stock. So what happens is, over a period of time, we have made a basket of smart SIP stocks. Presently, we have about 16, 17 stocks. So in the next month, what we will do is, we will find which one of these from these 16, 17 stocks provides the best opportunity. I mean to say value for money type of stock. And then we will recommend that stock. Also, we keep track of the weightage. So it is automatically you build a kind of a portfolio. And there are hardly any exits. Maybe once in 6 months or once in a year, we may ask you to exit because we may get a better opportunity to invest. Or even, so from 5th of one month to 5th of another month, in most of the cases, in most of the months, you are not going to get an advice to change any stock. And at our end, we assume that you are investing 10,000 rupees. You can invest in fraction or you can invest in multiple of that. And 1 year subscription price is the lowest among all our products. It is only 3,000 rupees for 1 year. Anything else you would like to know? Okay. Mr. Mohit Sachdev.
Yeah, good evening, Asnani ji.
Good evening.
Thank you so much for such a nice presentation.
Thank you.
And so just want to add the list of sector that you mentioned, including infrastructure, technology, where we can invest now, right? I was surprised that banking sector is not there in that. Because banking, if you look at all the NPAs are clean, and I think they are, I would say, business cycle also is also reviving.
Yeah.
So any particular reason for not including banking in it, sir?
Yeah, there is a reason, because the private capex has still not started, but in a very, not in a meaningful way. And still the results show that, of course, NPAs are declining, but the growth is missing. Means the kind of growth I was expecting is not there. And it may take maybe another 6 months of time. And also in the banking sector, in the leading bank, that is HDFC Bank, there was a change of CEO about a year or 2 years back. So I am a bit skeptical. And the other ones are Kotak Mahindra Bank, ICICI Bank, and Axis Bank. Public sector banks, as a principle, we don't recommend. So there are very limited opportunities in banking sector. That is why we have not covered here. And above all, the growth is still missing. It may take time, maybe I said 6 months or something like that. But it is not that only these, you have to select the companies only from these sectors. In every sector, there is an opportunity. In every sector, there are companies which are available at attractive valuations. So you can select accordingly. Jayesh Tiwari ji.
Hello, sir. Good evening.
Good evening. Good evening.
Am I audible, sir?
Yes, yes.
Okay. So first of all, thank you, sir, for organizing such a good and knowledge-giving webinars periodically.
Okay.
And I hardly miss any webinars and try to attend each and everything. If sometime I miss, then I see the recording next day.
Thank you.
Thanks a lot, sir.
Yeah.
Just wanted to ask for sake of knowledge that this automobile industry is now picking up, and again the price of steel is now stabilized, and raw material price is also stabilized now. It has gone haywire few months few months back, but now it is almost stabilized. Still prices drop. So why automobile is not covered in this sector? Upcoming sectors, automobiles is missing.
Yeah.
But I see that the price of, say, take example of two-wheeler. Few years back, average cost of two-wheeler was about 50 to 50,000 rupees. Like take a basic bike cost is 55,000 ki aati thi pehle basic bike. Now that bike is costing around 95,000. Almost double, and price growth is almost 80%, 70%, which is not in case of car. So it is clearly depicts that two-wheeler industry is growing at a faster rate, and manufacturers are able to pass the price hike to the customer. So how do you see the automobile industry growth in coming year? I think that good growth will come from this industry.
Okay.
आपका क्या राय है सर?
Yeah. You rightly said that as far as the main raw material, that is the steel. Of course, steel prices have softened, but if you compare from January 2010-20 level, then still steel prices are high. And semiconductor shortage is slowly that is being taken care of, and there is a more and more availability that has been confirmed by a couple of OEMs, auto OEMs. Why we have not recommended OEMs? Because there is a lot of technological change going on, and you must have noticed that, especially in two-wheelers, there are the leading three companies, well-established three companies in the domestic market. They are yet to fully launch their full range of EVs, but there are many startups. I believe there are about 100 startups, mostly from the Pune and Mumbai region, who have already launched their two-wheelers, and a couple of them are very successful also. So this is a game changer. This is a total technology change. So I'm skeptical. Maybe it is quite possible that maybe one or two of the well-established players even may be dislodged by the new players. Also, even in four-wheelers, there is a lot of new companies are entering, and even I heard that Sony is also going to launch a four-wheeler. So now you can imagine what is going to happen. So why to take those risks if at all you want to participate in the automobile boom? Then go for the auto ancillaries, which are supplying to EVs rather than going for the OEMs. In the OEMs, I am yet to see an established OEM coming out with a proven vehicle. But definitely, the auto ancillaries who are supplying to the EVs will be the winners.
Right, sir. Thank you, sir. Sir, another thing, small thing I want to ask. Any stock recommended by you, and if it falls by 15%, so you taught us that 15% drop you can do averaging. We learned this from you only. So if it falls by 15%, so we can do further buying in that, or it is advisable to buy in two phases. If weightage advised by you is 4%, 2% we buy immediately, and if it falls by another 10 to 15%, we buy another 1%, 2%.
Yeah.
To lower the cost.
See, that is you can apply your strategy also. There is nothing wrong in it. If I advise you to go for 4% weightage, you can always go for 2% weightage now and wait for the reaction. That is up to you. But what I suggest and what I have seen, which works every time, is like this: you go for the full weightage allocation, whatever I have given you. And if the stock falls down by 15% or 20% from those levels, then you can buy, because if the stock falls down by 20%, then definitely your weightage will also come down. Then you can restore that weightage by buying the additional quantity. That way, you will not only maintain the weightage, but also your average cost of acquisition will come down. And why 15%? Because you might have observed that in the history of Indian stock market, it is only a couple of times it has happened that even the good companies have fallen by 50%. So if you apply the 15% rule, then you will get 2 times you will get an opportunity to add. And if you reduce this to about say 5%, then most of your money will go to the brokerage and the difference in the buying and selling price. That is the jobbing price. So that is why I have given you 15%.
Right. Sir, thanks a lot, sir.
Thank you. Thank you.
Thank you.
So with this, we come to the end of today's session. Thank you very much. And I can see lot many participants who are very much regular. Of course, they have. I can see a lot of you never ask also any questions, but you regularly attend this session. Thank you for the trust. Thank you for the confidence. Thank you for the time you have spared. Thank you very much. Bye bye.